Hey everyone, welcome back to another video. In today's video, we're going to talk about the continued conversation around operations, and in particular, we're going to talk about operating expense reimbursements. So this is a critical piece of different kinds of commercial leases. Let's dive into it. So first on the agenda, we're just going to describe or define what are reimbursements. Like, what does that even mean? From there, we're going to define the term pro rata share and really clue in on why that's important relative to this topic of OpEx reimbursements. We'll talk about how we can calculate them, and we'll end on where reimbursements are reflected within typical underwriting or pro forma or some kind of analysis, right? Like, that's really at the end of it, like, why do you even care about this topic? So let's start at the top. First, what are expense reimbursements? What are reimbursements? And I think, as the name would imply, this is a refund to the property owner. And so it's typically a refund of expenses that are incurred by the tenant. So if an expense is generated by the tenant, let's say a utility bill or a janitorial expense, those expenses are due because of that tenant. And so the owner will ask for reimbursement of payment of those expenses. So this is an amount due, if any, and that qualifier is really based on the kind of lease that we have. So not all leases require reimbursement by the tenant. There are some, like we'll see in a moment, that don't, and some that are partial and some that are full reimbursement. So let's talk about that briefly. So on one side, on the left-hand side, you'll notice we have a full service lease. A full service or a gross lease really only obligates the tenant to pay base rent and nothing else, so only blue. Now on the opposite end of the spectrum, we could have something like a triple net or an absolute triple net lease, where the tenant is responsible for paying both blue, base rent, but also some portion or share of expenses due. So in this case, the tenant may be responsible for paying their share of taxes, insurance, utilities, landscaping, repairs and maintenance, and so on. And so that portion of expenses that the tenant is also responsible for payment is really the way that we distinguish between different kinds of leases. Who is responsible for paying expenses? Who is responsible for reimbursement of those items? So we'll typically focus our attention on everything to the right of a full service or a gross lease. So from here, I think it's important to talk a little bit about, like, why does this happen, right? Like, which expenses are even reimbursed? Why do you even care? So this is an open-ended question to a degree, right? It really depends. It depends on the lease. The lease will define which expenses, if any, are eligible or required for reimbursement. So which expenses are up for grabs? All of them are. So taxes, insurance, utilities, payroll, third-party expenses, you name it. Now, what I think is really important here is to clue in on the idea that the lease defines. So if the lease says all expenses, great. It's probably a triple net lease. And if it is, then we'll work through the calculations and it'll be defined in the lease accordingly. But the lease is the one that will govern how much, if any. So let's go through a quick example. Let's say you were taking a look at this office building. So this office building has a dentist that occupies 100% of the third floor. So this dentist is going to incur expenses, right? So they're going to have a water bill or an electric bill, or maybe a janitorial bill or a security bill, right? So who pays for those expenses? So under a particular lease type, so how about we just say a triple net lease hypothetically, so shouldn't they pay their share of those bills? Maybe. But again, this is where the lease is really important. So what if there are expenses that are not directly tied to this particular tenant? So what if these are just operating expenses for the building overall? Should all building expenses be passed along to the tenant? So let's say, for example, a legal bill that's associated with a different tenant Should the dentist pay a portion of that bill? Or what about valet parking? What if the dentist requires valet parking and none of the other tenants use it? Should the dentist pay all, some, or none of that expense? So this is why "it depends" is so important for you to remember. The lease will define it, but how much, if any, of any of these items really needs to be thought through by both the owner and the tenant. So another way to describe an expense reimbursement is maybe a pass-through expense, because the tenant is really just going to collect the bill from whoever generates the bill. So let's say it's an insurance company, they have a premium for the policy, and the landlord is just going to pass along that premium expense. They're going to pass it through onto the tenant. Another one is triple nets. While that's a lot more casual and informal, it is really a reference to the kind of lease that describes the reimbursement structure. So from here, let's talk a little bit about pro rata share, because I think this helps us understand how this could be equitable, right? So how do you split a bill or an expense fairly? Why would you even split it at all? So let's take ourselves out of real estate for a moment, and let's just imagine that we all go to dinner together. So let's say we all go to a sushi restaurant. We're eating good, we feel good, we're laughing, we're drinking, we have a great time. The bill comes at the end. So let's say my meal cost a third of the bill. I think it's only fair that I pay a third of the bill, right? So my share of that expense is 1/3. So think about it the same way for the dentist. So if the dentist occupies 10,000 square feet of a 30,000 square foot building, all of the third floor, then maybe they should pay 1/3 of all expenses, 10,000 divided by 30,000 square feet. Now, while this is, I think, a really straightforward way to approach this, whatever their rentable area is divided by the total of the building to come up with their proportionate or pro rata share of the building, and so therefore the proportionate share of expenses that they're eligible for billing or for reimbursement or pass-through, that may not always be the case. So even though proportionate is the space that they occupy divided by the total, what if they use more or less? Or what if they're a great tenant or great negotiator and they negotiate something different? Again, this is where the lease holds true. So it is possible for there to be a disproportionate sharing of expenses, either higher or lower. It is possible for there to be individual billing on a particular line item. So maybe the dentist is responsible for 50% of the water bill and only 1/3 of the electric bill, or 100% of the valet and none of the landscaping. So it is possible for us to share disproportionately. And I think in that same vein, it's possible for us to get a lot more creative with how we measure and pass along these expenses. So let's say, for example, there is a ceiling on an amount. So just hypothetically, what if the electric bill was $3,000 for this month? Yes, the proportionate share for this dentist is 1/3 of that $3,000 bill, $1,000, but maybe their lease says that in no event should this tenant pay more than $800 per month in electric. So even though the bill is higher, the lease said that there is a ceiling, or an alternative, maybe there's a floor. So there's a lot of ways in which we can get creative, we being either tenants or owners, but there's a lot of ways in which we can get creative to help make sure that it is an equitable or fair distribution of those expenses. So let's kind of dive into the second half of this and really like the meat of this process, right? So how do we calculate expense reimbursements? So let's follow along with this example. Let's assume that there is a 33% pro rata share associated with the dentist. What if the total operating expenses for the whole year for this building is $100,000? All right, so 1/3 of $100,000 can give us the estimate of reimbursements that are due by the tenant. So the amount that the tenant needs to refund back to the landlord. Now that amount of $33,333 annually can be billed monthly, quarterly, or at one time at the end of the year. But however it gets worked out, this is typically the process for how we calculate that amount altogether. Now, these amounts, so this reimbursement amount, is typically budgeted in advance. The tenant will pay according to the budget, and then it's just adjusted periodically, quarterly, semi-annually, or annually, right? Annually is typically the easiest, but it could be more frequent, so that if there's an over or under payment, it gets adjusted. So again, it could be billed on some kind of budget, but just as easily it could be billed on an actual. So if the utility bill comes in at the end of the month and it shows $3,000, they can bill based on the actual amount. And so last but not least, let's take a look at what happens to that estimated reimbursement amount. So what happens to that the $33,000 that the tenant is responsible for paying? So that really becomes part of the revenue that you can collect as a tenant, as an owner. So just as a quick example, let's say you have base rental revenue of $350,000. So that expense reimbursement amount is the same $33,000, but it gets added to that global pool of money that you expect to collect. So the $33,000 gets added to the $350,000. So the subtotal of total best case potential income is now $383,000. Now, don't forget though, that just because you are collecting some of this reimbursement revenue because of that lease, doesn't mean that you can simply ignore all the operating expenses. So you still have that $100,000 bill. The only difference is that because the lease type you chose and the negotiations with that tenant, you get to claw back or again be refunded some of that bill. So you get to collect $33,000, but you still had to spend the full $100,000 bill. So the way that this will look globally is you'll have the $33,000 worth of reimbursement revenue, but you'll still have the $100,000 of operating expense, resulting in a slightly higher NOI if it was a gross lease. So just to recap, I know this was a long one, but just to recap, we've got first, what are reimbursements? It is a method for an owner to recapture or get refunded some portion of operating expenses. We calculate them typically based on the pro rata share of the tenant's space. So we could say, again, in our example, tenant occupies a third of the building, so let's pass along a third of the expenses. It's possible for us to get a little more creative, but we can talk about that creativity in another video. And that $33,000 worth of reimbursement revenue gets recognized as part of potential gross income. Just make the note that you don't make the mistake of excluding all of that operating expense bill. You as the owner still had to pay it. You were just refunded a portion of it. So that does it for this one. Thank you again for taking the time. I hope you learned something. If you have any questions, please reach out. Otherwise, I'll see you in the next one. Thanks.